Hello and welcome. On this video, I'm going to be talking about the major economic updates in Canada and also how to navigate the Canadian economic challenges in 2024 and 2025 and beyond. Now, as we explore the state of the Canadian economy, focusing on the recent developments, the US dollar versus Canadian dollar exchange rate, and what this means for investors and everyday Canadians, make sure you subscribe for more updates on Canadian economic updates and also the financial markets in general. The Canadian economy has been facing a downturn. According to Statistics Canada, the GDP growth was a negative 1% in the last quarter of 2024, with per capita GDP decreasing for 6 consecutive quarters. Unemployment has risen to 6.8%, indicating a cooling labor market, and the Bank of Canada has responded with aggressive rate cuts, lowering the interest rates by 50 basis points last week to stimulate the economy. Now, if I look at the US versus the Canadian dollar exchange rate, the Canadian dollar has been notably weak, trading at around $1, 1.4233 Canadian dollar per US dollar as of today, December 16, 2024, according to Trading Economics. This is one of the lowest points in the last 5 years, and the several factors that have contributed to this exchange rate weakening has been: number one, interest rate differential, with the US maintaining a higher interest rates relative to Canadian interest rates, capital flows towards the US dollar, thus weakening the Canadian dollar. Number two, commodity prices. Canada's status as a major exporter of commodities like oil has been hit by global price volatility. Three, political uncertainty. The recent announcement by President-elect about imposing 25% tariff by President Trump has caused immediate market reactions, pushing the Canadian dollar. Now, historically, the Canadian dollar has been sensitive to these factors. Data from the Federal Reserve shows that between 2002 and 2007, when Canada had the highest interest rates than the US, the Canadian dollar appreciated from 0.6250 to 0.9406 against the US dollar. Now, if I look at the historical trade data and tariffs, trade between Canada and the US is vast, with over $3.6 billion worth of goods and services exchanged in terms of trade daily. According to Statistica, in 2023, Canadian exports were US 637 billion, while our imports were 631 billion. This deep integration means that any tariff, especially 25% one proposed by President-elect Trump, would significantly disrupt trade. Historical impact in terms of the first term with President Trump, the tariffs on steel and aluminum led to retaliatory measures, kind of like a trade war from Canada, affecting industries like automotive and manufacturing. Now, the current implications of the 25% potential tariff can potentially push Canada to a recession. That means a slowdown in the economy, particularly affecting sectors like energy, manufacturing, which are heavily with our heavy reliance on the US as the export market. Now, this is a possibility. I'm not saying that's what's going to happen. Now, current political events, the political landscape in Canada has also been turbulent, with Finance Minister Chrysler Freeland recent resignation. This comes at a critical time when economic policy needs to be clear in terms of my perspective. Now, the upcoming fall statement will be pivotal under the new leadership to address these economic challenges. What should investors do? For me, I would consider diversifying into sectors that are less affected by interest rates, such as technology and healthcare, should current fluctuation and tariffs continue. Number two, currency hedging. For those who have exposure to the US economy, it might be worthwhile to consider investment in the US-dominated securities, to consider hedging for potential continuation of the Canadian dollar depreciating. Now, I also like to always say keeping a long-term perspective in investing can help in taking advantage of the current long-term, current volatility in Canada, because over the long term, it has been shown that Canada has a potential to come back in terms of the economic opportunities and all these economic variables. So this might be a opportunity to actually consider those sectors that have huge potential to go up. Now, what should ordinary Canadians do? For me, I'm considering budgeting adjustments. With a weaker Canadian dollar, I would expect higher costs of imports, adjusting personal budgets because traveling to the US or in other currencies that are stronger than the Canadian dollar, it might be more expensive, but I expect to see other more people coming to Canada as the Canadian dollar weakens. Now, debt management with lower interest rates, it might be good time for others to consider refinancing their mortgages or debts if they can secure favorable terms. But again, for me, I like to do it unconventionally. When the interest rates drops, I want to be paying off more aggressively because debt can potentially leave you in a difficult situation, especially if it is high interest paying debt. But of course, circumstances differ. Now, in terms of savings, consider saving in instruments that might benefit from inflation or currency appreciation. I like to save some money or emergency fund in US denominated accounts, currency hedging, rather than leaving the money in Canadian dollars. Of course, some for the day-to-day basic a transaction, I can just do that, leave them that in Canadian dollar. But in conclusion, the Canadian economy is at crossroads now with significant challenges, but also there's a very good potential for recovery. So I like to keep an eye on political developments in Ottawa, what's going on, especially the concerning also the US, the tariff, and the Canadian policy response. For more insights, don't forget to subscribe to my channel and like this video and subscribe so that you can also learn from each other. For now, stay informed and stay in touch and be prepared for more turbulent or exciting times. See you in the next video and thank you so much for tuning in on this video. Bye bye for now. Trade and invest wisely and may the markets be on your side.